We're going to have a panel today that is going to be led by your host, the Chief Executive of the Hong Kong Monetary Authority. Eddie Yu is going to be joining us. We'll bring Eddie up here as I introduce the rest of the panel. He is going to be joined on stage today. Come on, Eddie, don't be shy. Here he comes. There we go. He is going to be joined on stage today by Mr. Yuanqi, who is the Vice Minister of the National Financial Regulatory Administration. Please join us. We are also going to have with us Mr. Wang Jianjun, who is the Vice Chairman of the China Securities Regulatory Commission, and as well, of course, oh yes, please come and join us, gentlemen, as we call them. Thank you very much. Mr. Zhang Qingsong, who is the Deputy Governor of the People's Bank of China. Ladies and gentlemen, they are on their way to the stage. Let's give them a warm welcome, please.
All right, we are going to start today's session with an area that I think is on the top of your mind, which is where China's economy is going, where are the risks, should we be worried about the property sector or the local government debt, where are the opportunities, what's the current state of the opening up of the capital markets, the reforms there, or whether we can find opportunities in new trends like the new energy or electric vehicle areas. So we are really honored and fortunate today to have three senior officials from the three mainland financial regulators to join us to talk about the China's state of economy. I will just go straight because I think today's rundown is a bit tight. So I'll just go straight to Deputy Governor Zhang. Around the room, when I talk to people, there's quite a bit of concern about where the China's economy is going, whether the recovery has been slower than expected, and some people are a little worried about whether there are risks in the property sector or in local government debt or even in the regulation of the technology sector. But they also see opportunities. So I think it's a great opportunity for you to tell us from the PBOC's perspective how you see the economy, where do you see the risk, and the measures taken so far, are they effective in dealing with all these risks? Deputy Governor Zhang.
Thank you so much, Eddie. I have a prepared speech. I will answer your question in paper. Honorable Chief Executive Zhang Li, distinguished guests, good morning, everybody. It gives me a great pleasure to attend this business summit. As Eddie mentioned just now, global investors have some concerns about Chinese economy, including the pace of economic recovery, problems with property markets, and local government debt. You may ask me, are you worried? No, not always, not too much. My evaluation of economic performance are placed in the long-run framework. If the short-term economic indicators have not significantly deviated from the long-term trend, I prefer to leave market forces to play their roles and do policy adjustments if necessary. First, about China's macroeconomic trend. From the long-term perspective, the fundamentals of the Chinese economy remain stable and promising. The working age population in China has exceeded 900 million, with an average schooling of 11 years. Among them, 240 got their higher education, and 70 million are engineers. Our investment in R&D is growing very fast, exceeding 3 trillion yuan in last year, ranking the second in the world. All this kind of development, I believe, will lay a solid foundation for China's long-term high-quality growth. Moreover, China has fine designed comprehensive economic and social development program for each year, for every 5 years, and even for 2 or 3 decades. All important factors, including land use, capital formation, labor productivity, international trade and flows, technological advance, green transition, etc., are taken into consideration in these programs. These programs serve as a source of guidance for all levels of governments, businesses, and individuals when they make decisions. Looking back upon China's economic and social development over the last 40+ years, we may gain confidence by the very fact that all important goals China set for itself have been achieved despite very complex internal and external environment. Thanks to reform and opening up, China has been able to tap its comparative advantages, such as lower labor cost and relatively abundant natural resources. It has gone a long way towards urbanization and industrialization and grown into the second largest economy in the world. But today, these traditional drivers are losing steam, and the old development model relying heavily on infrastructure investment and the real estate sector is no longer sustainable. That is why we must shift to a new approach to promote innovative, coordinated, green, open, and inclusive development. Such as the paradigm shift is bound to be difficult. But whatever difficult it is a challenge we must face and overcome. This year, Chinese economy is facing some pressure and challenges after 3 years of pandemic. But in general, the economy is resilient and dynamic, especially in the third quarter. As the positive factors have been on the rise, the economy recovery picked up notably, and growth momentum further strengthened. In the first 3 quarters of this year, it grew by 5.2%. People's income has been rising, with the real disposable income per capita gaining 5.9% year-on-year, leading to greater people's purchasing power. Consumption-centered growth models are further gaining momentum. China's export has remained close to its historical high in recent years, and the current account surplus has been in the range of 2% of GDP. The structure of exports has improved too. In the first half of the year, exports of new products, such as electric vehicles, lithium batteries, and solar cells, all grew by 60%. China is expected to be the largest auto exporter this year. In addition, our macroeconomic policies are designed to take off both short-term and long-term needs. On the monetary front, since the beginning of the year, we have adopted a policy mix to support the economy, including cutting interest rates to a historical low for companies and individuals, optimizing the credit policy for first-time home buyers and mortgage holders, and ruling out many measures to mitigate the risk of local government debt. On the fiscal front, we have raised the deficit ratio not long time ago, issued additional central government bonds, special local government bonds, and refinancing bonds, and provided VAT refunds and tax incentives. Second, about the local government debt issue. We all believe that the overall debt level of a Chinese government is in the middle to lower range by international standards. According to the BIS, as of the first quarter of this year, Chinese government's leverage ratio stood at 79.4%, lower than many advanced economies. Compared with the limited debt burden of the central government, local governments have different stories. I believe local government debt is a structural issue, as most debts are issued by governments in eastern and central provinces, where the size and the growth of economic output outperform others. That means they have strong ability to serve their debts. We can tighten accountability so that local governments in these regions can solve their debt issue on their own. Few provinces may face some pressures in servicing their debt, but most of their debts are backed by physical assets. The central government has mapped up a package of plans to handle local government debt issue in a market-oriented and a law-based manner. While addressing short-term issues, we aim to build a long-term mechanism. We believe with the implementation of targeted policies, the risk of some local government debt will gradually recede. Third, about the property market. Over the last 2 decades, China's property market has kept expanding. The per capita floor space has risen from 22.8 square meters in year 2000 to nearly 42 in the year 2022, close to that in advanced economies. Like in other industries, the rapid growth of property sector cannot be sustained. At some time, the supply and demand will experience a major shift, and some correction may follow. This is the natural selection and market clearing process. Having said that, we also needed to carefully manage its pace to avoid sharp downturns and unintended consequences. We have rolled out many policy measures this year to stabilize the property markets. In the long run, China has much room for urbanization. Each year, there are about 10 million rural residents migrating to and settling down in cities, which will continue to show up housing demand. Besides, as most residents are now living in small and medium-sized flats, the potential demand for larger rooms remains strong. In addition, we're now carrying out three major projects, namely constructing dual-purpose facilities in metropolis, speeding up renovations in big cities, and building more rental homes. These measures, we believe, will promote an even healthier property market in the future. Therefore, we are quite confident or quite optimistic about the future of China's property market. These are my points, my observations. Thank you for your listening.
Thank you very much. Thank you, Deputy Governor Zhang, for providing a very useful perspective on the various issues that I think are on top of the minds of many global investors. Let me now turn to Vice Minister Shao. Earlier in the year, we've seen quite a few episodes in some overseas jurisdictions about the problems in small and medium-sized banks, especially in the management of the interest rate risk. And what lessons do you draw from these incidents for the small and medium-sized banks in China? Are you worried about some of these banks? So what's your take on it?
I prefer to sit here, not stand. Okay. Thank you very much for the question, Eddie. And actually, this is my question for you. The banking turmoil starting early this year in some countries is one of the key concerns among the international banking community, you know. I remember last March I participated in a conference also hosted by Hong Kong Monetary Authority last March for the international supervisors. At that time, everybody participating in that conference is very worried and very depressed because they worry another global banking crisis. But today, everybody in this room seems very happy because another global banking crisis has been successfully avoided. I think this is largely due to the quick response and the actions taken by relevant authorities. There are a lot of discussions about the lessons, as you mentioned, what the lessons we can learn from this banking crisis globally. A lot of such discussions, I believe everybody here can have your own thoughts. But for me, I would like to share some of my thoughts. I think the first one is the bank's business model should be more adjustable, more adaptable to the changing outside business environment. Because we have seen that in the last decades, 2 or 3 decades, in many countries, we have seen a very low inflation rate, very low interest rate, easy access to finance, easy money, the so-called easy money. Most businesses, including the banks, their business model has been built up under this external environment. But in 2022, this has changed. In many countries, the monetary policy, the interest rate policy has changed. in a very, actually it's a U-turn in a very short time. I don't think for any businesses they can survive under this sudden changes, although most of them managed to cope with the situation, but some of tried to, but still failed. I think the business model should be working effectively, not only under the normal situation, but also in the stressful, sometimes extreme situation. Otherwise, nobody can guarantee you can survive under stressful situation, because for banks, particularly small banks, they do not know what will happen for the outside business environment, including their policies. What they can only do is to enhance the business model, to make the model more flexible to the outside changes. The second one is the liquidity management for our banks. This is particularly important for small banks, because small banks have less capital base, less resources to weather the crisis, the outside deterioration for them. I remember in 2008 when the Northern Rock Bank suffered liquidity press. A lot of people are standing outside of the bank's building to take their money back, and a lot of police stand beside to keep it in order. But now things have changed. You cannot see the long line up in front of the bank's building, because people do not need to go to the banking account to get their money back. They can do so through the smartphone, through computers, to withdraw their money very quickly in a very short time. So for the banks, also the regulators, they need a very quick response, very quick decision making. But in the past, they have sufficient time to cope with that. But now, things have changed. So the quick response, quick cooperation, and the quick decision making, quick actions to take is the key to prevent a widespread liquidity crisis for the banks, particularly small banks. And the third one, I don't want to talk too much. The third one, also the last one, for small banks is the golden rule to control the concentration risk. Do not put all your eggs in one basket. It's the golden rule for small banks, because the small banks, if you too much rely on one or several large clients, it's very dangerous. Sometimes even fatal for them, for the small banks, because if you have too much exposure to large customers, unlike the large banks, you have very, very limited resources to do so. So the best way for them is to diversify their funding resources and their credit portfolios.
And Vice Minister Zhao, I thought for China, two main areas which are key engines for the growth of the economy are technological innovation and sustainable development. How do you think the bank industry in China can support these developments so that finance can support the real economic growth? And what's your take on this?
Yes, just as what you mentioned, the technology innovation and the sustainable development is the driving forces for the Chinese economic growth. I think for the banks, it's a huge potential market. I think it will expand the production possibility frontier for all the banking industries a lot. For banks, there actually is there are opportunities, but still we have a lot to do to boost these new growth engines. I think the first is for the strategy, the bank strategy. They should reassess, I think the board should reassess the strategies to have more elements in the strategy. Of course, the strategy, you cannot hang the pictures on the wall. The strategy should be realistic and achievable. And also, the tone should be from the top and be well communicated within the institution as a whole to not only the senior managers, but also the staff of the whole banks can know what your strategy is and what your objective is, or what your vision is. The second is the banks should re-innovate their products and their services, because the new economies, the new sectors have a very different business strategy, business model, and they have very different financial needs from the financial industries. So the banks should change their products so as to better serve the different, sometimes even unique financial needs for the technology startups and also green industries. Mr. Ho, Vice President Ho also mentioned about this. And the third one for the bank is to train the staffs to be more accommodative to this new development. As a supervisor, we are now introduce more ESG elements in our supervisory philosophy and methodologies, also our supervisory practices. For example, for the green lending and the green bond investment, they can enjoy more favorable capital treatment, low risk weight rating, and international cooperation between the regulators also is crucial. And we are now having a lot of cooperation with the other supervisors from different jurisdictions to take action together. And I think the Hong Kong Monetary Authority will have made a lot of efforts to do so. We have so much experience, and we encourage Chinese banks to be more involved, more participative in this market here in Hong Kong. And here a lot of innovation, and you have already chaired a lot of. I think both you and Arthur have chaired a lot of sessions about green finance and to cope with the climate change. And the Chinese banks, insurance company can do more. Because we also, as this insurance supervisor, I found that the cooperation between banks and the insurance companies is also important, because in terms of the data accumulation, the insurance has a longer history of data warehouse to cope with the climate change. I think it's also very important. Thank you.
Thank you very much, Vice Minister Xiao, and in particular for your support to the Hong Kong platform. And let me now turn to Mr. Wang. And we're going to use Putonghua, switch to the channel of Putonghua for now. Wang 副主席，非常高兴你。
Welcome, Mr. Wang. Welcome to our summit today. We noticed that recently you have launched many measures focusing on mainland's capital market. For the international investors, they are also concerned about the direction and pace of mainland capital markets opening up. Has there been a change? What is your take on this issue? And what about your views on the further opening up of the capital market? Thank you. Thank you, Eddie. Well, Hong Kong is very diversified, My English is poor, so I better speak in 普通话. The Honorable Chief Executive, distinguished guests, to answer Mr. Yu's question, my view is as follows. Opening up is a fundamental national policy of China. In my point of view, this is an essential tool for China's economic takeoff and fully building a moderately prosperous society. And it's also the only way to a stronger country and national rejuvenation. The mainland's capital market itself is the product of reform and opening up, and has also developed and grown through continuous reform and opening up. Like China's opening up, the door of capital markets opening up will only be wider in the future. Over the years, we have been launching a two-way opening up of the capital market with good results. First of all, in terms of industry opening up, restriction on foreign capital's proportion of shareholding has been fully lifted. We also practice what we preached. We have given new licenses to one solely owned foreign securities company and 3 solely owned foreign fund management companies. 2 more domestic and foreign joint venture fund management companies became solely owned foreign companies. So far, for this industry, there are 21 securities companies and fund management companies that are solely owned by foreign institutions or controlled by foreign institutions. And there are also 41 domestic and foreign joint venture securities and fund companies. And we are still getting a lot of applications, and we are vetting the applications in accordance with the rules and regulations. In terms of the opening up of our products, we launched China-Japan, China-Singapore, Shenzhen-Hong Kong, and Shanghai-Hong Kong ETF connectivity, with more than 20 ETF products under the regime. In terms of cross-border financing and investment, we have the following expansion. Shanghai-London Depository Receipt Connect, and that was expanded to include Shenzhen Stock Exchange and exchanges in Switzerland and Germany. And 21 domestic listed companies have issued GDR under this regime. We optimized rules for filing of overseas listing, which took into effect on the 31st of March this year, creating a more transparent and predictable environment for overseas listing. In terms of cross-border regulatory cooperation, we actively deepen bilateral and multilateral regulatory cooperation with international peers under IOSCO, and other international framework, and we have signed MOUs with securities and futures regulatory authorities in nearly 70 countries and regions. The Audit Regulatory Cooperation Agreement between China and the USA explored a feasible path for mutual respect, equal communication, and professional cooperation between both parties. Mainland and Hong Kong regulatory authorities established communication mechanisms at both executive and working level, continuously expanding the depth and breadth of regulatory cooperation. The recent Central Financial Work Conference proposed to steadily expand institutional opening up in the financial sector, enhance the convenience of cross-border financing and investment, attract more foreign financial institutions and long-term capital to develop business in China. We will earnestly implement the Party Central Committee's decisions and plans, deepen and expand cooperation with overseas markets in market connectivity, optimize QFII scheme, support eligible foreign institutions to participate in the mainland capital market, actively take part in capital markets international governance, and unswervingly promote institutional opening up of our capital market. In terms of opening up, our ancestors had a very open mind when running markets. As early as the time of Shenlong, our ancestors proposed that markets should be open at noon time so that the people of the world could gather the goods of the world. People trade and everyone would get what they want. We, of course, have this pursuit in building a modern capital market today. We will make our rules for opening up more complete and robust. We will offer more and more products in the market to include products of all over the world, while at the same time increasing market participants, attracting investors from all over the world, and building an environment where investors from all over the world are willing to come, willing to stay, and able to develop. Investors, dear guests, no matter from which angle you look at it, just now Mr. ZHANG from PBOC and Mr. XIAO told you that all the concerns have been addressed. At the moment, the mainland capital market is full of opportunities. If you get on this train, then you will certainly escalate to a high level, because loan will take you to a high level. Thank you very much. Thank you very much when you are being so positive when you describe the opening up of the capital market. From the angle of Hong Kong, we are also interested in listening to you. In relation to the CSRC, in relation to your support, it was very strong in the past. What is the future like? Would you continue to support mainland enterprises to get listed in Hong Kong? Thank you. Well, the Central Financial Committee meeting, in fact, did say that we should work hard to enhance Hong Kong's status as an IFC. Just now, Mr. He, the Vice Premier, also talked about his expectations in this regard. For us, in supporting the capital market of Hong Kong in our support of the establishment of Hong Kong as an IFC, we won't shirk our responsibilities. Well, in fact, as to our cooperation with the Hong Kong capital market, it's always been very close. This because we have such a close and genuine and sincere cooperation. The capital markets of the two places have been developing continuously. In particular, in recent years, with our joint efforts, a number of measures have been launched. They are innovative in nature. As a result, we have facilitated the rapid development of the Hong Kong market. Say, for example, Shanghai-Hong Kong Connect. Well, it is a very excellent story when it comes to innovation of the capital market. It is also a very good story to illustrate one country, two systems. And this story is being evolved all the time, and we are writing new chapters one after another. We are optimizing the settlement rules, and we are enriching the objectives of investment. In March this year, and we expanded the Shanghai-Hong Kong Stock Connect. With that expansion, it means that we are able to immensely enlarge its coverage when it comes to Shanghai, Shenzhen, and Hong Kong market. 81% for Shanghai, 86% for Shenzhen. For Shanghai, the coverage is 91%. Currently, Hong Kong is truly the main field for China concept stocks. We have 1,400 such stocks being listed in the Hong Kong X. 50% is the share in the Hong Kong market. And in fact, for the trading volume, it takes up 80%. In March this year, we have also got new rules. From March to October, 34 of them have come to Hong Kong. And in fact, they are coming to Hong Kong continuously. And in terms of products, in terms of capital support, all such measures have been very effective. And we have been supporting Hong Kong in launching the A50 index future. We also support mainland enterprises using Hong Kong to go out. We have got 80 of them working in Hong Kong, and they have adopted Hong Kong as their base. Well, it means that for such measures, we are able to enhance Hong Kong market's vitality and will greatly consolidate Hong Kong capital market's international competitiveness. For the next step, for anything that will be beneficial to the Hong Kong capital market, anything that will enhance its status, the CSRC will go all out to do that. First, we'll make it easier for mainland enterprises to come to Hong Kong to get listed, and we will deepen and optimize the Stock Connect mechanism, promoting the implementation of inclusion of block trading. And we have also come to an agreement, and we are talking about the techniques, the supervision. We are striking out the details. Once they are ready, we will launch it as soon as possible. In addition, We have the renminbi counters. We are also studying it. When it is ready, again, we will have it launched and included directly. In addition, in the light of the market developments in Hong Kong, we are going to have index options and stock bonds. Of course, in the course of it, we will enhance our supervisory cooperation with Hong Kong. We will crack down on market violations and will maintain the market order in both places and will effectively protect the legitimate rights and interests of investors. Hong Kong is the pearl of the Orient. It is advancing from stability to prosperity. I firmly believe that after going through the ups and downs, the pearl of the Orient will not only retain its charm, but will also become even more brilliant. Thank you. Thank you. Thank you very much, Mr. Wang, for your strong support for Hong Kong. Well, for this session.
Thanks very much to all our financial regulators for attending this session, and I'm sure that you all will be benefited from the perspective from our three regulators. So please join me in thanking all our speakers for this great session. Thank you.